Hello everyone, hope you all are good and I hope that you have studied illustration 7 properly that I taught you in the previous lecture number 21, the lecture previous to this, and I also expect that you have completed the homework which was given to you on the same basis, several sums from exercise. Yeah, the concept was about pro rata allotment of shares. And also we have learned the journal entries when a joint account of application and allotment is kept. We have learned this journal entries in the last lecture, the previous lecture to this. And as I said that we are going to do a sum similar to that concept in the next lecture, that is in today's lecture. We'll understand the illustration, which is very short, and I'll also explain a sum of similar kind which is given in exercise so that you can do it well in homework. Yes? So, chapter 1 that we are doing from part 2, accounting for share capital. And in today's lecture, we are going to understand illustration 18, which is given on page number 50 in your textbook. Yes, in the last lecture we have understood about illustration 17, which was very simple. And now we are going to start with illustration 18. But before that, let us revise the journal entries on basis of which illustration 18 is to be understood. These journal entries I have also explained in the previous lecture at the end in 5-10 minutes, yes, of the lecture. So yes, the sum is about when a joint account, common account is kept for application and allotment instead of two separate accounts. Yes. So 4 journal entries we have understood about same, of which the very first is about receipt of application money. This is given on page number 48 in your textbook and the same is presented on your screen. The first journal entry is about receipt of application money. The journal entry is simple. It is similar to the previous journal entries, just the word allotment is to be added along with application. The first journal entry is bank account debit to share application and allotment account. Second journal entry, which is about transfer of application money and allotment money becomes due. So they have combined 2 journal entries because a joint account is maintained. So second journal entry on transfer of application money to share capital and allotment money due. It says share application and allotment account debit to share capital account. Alright. Now talking about the refund, the amount of money which is to be rejected, the amount that is to be refunded. The journal entry for the applications which are rejected. Share application and allotment account debit to bank account. And finally, on receipt of allotment money, you don't have to write just to share allotment. You have to write it as to share application and allotment account. Yes? So, minor changes, nothing new except for the addition of the word allotment with application. Yes? And a separate journal entry for refund of money. In usual cases, we are writing it as to bank along with the transfer of application money to share capital, if you remember. Here, the journal entry is to be written separately, nothing else. Alright? Fine then. These 4 journal entries, firstly, you have to write it down in your fair book. You have to learn them, you have to understand it well, and then we'll start with illustration 18. We are done with the understanding of these journal entries, so let me begin with illustration 18. Illustration 18 is given on page number 48. Let me read the question. The authorized capital of Sanjay Limited of Patan is 1,60,000 shares of rupees 5 each. On April 3, 2017, company issued 1,20,000 shares at a premium of rupees 200 per share to public. Amount payable per share was as follows. On application, 102 per share including premium of 100. That means 2 rupees is for application and 100 rupees is of premium. On allotment, rupees 103 including premium of rupees 100 as on May 1st, 2017. So 3 rupees is of allotment and 100 rupees of premium. So 100 with application, remaining 100 with allotment. 200 premium is done. Rupees 5, 2 with application, 3 with allotment. 5 रुपए का ही शेयर है. Fine. So up to April 5, 2017, company received application for 1,84,000 shares from public. From these applications, 4,000 shares were rejected and on balance share application, 1,20,000 shares were allotted. All called up amount were received in proper time. Company maintains the combined share application and allotment account. This is the new topic for today. This is the topic for which journal entries we have understood, but we have never done a sum of such kind, where a joint account, combined share application and allotment account has been prepared. Yes? Okay. So, obviously, once they have clearly instructed in the question that company maintains the combined share application and allotment account, so obviously we are going to apply the 4 journal entries that we have learned, and the sum is very short. So, starting with the understanding of question, we have learned, we have read the entire question and now we are going to understand the same. The authorized capital is of 1,60,000 shares. How many shares have been issued? 1,20,000. Out of 1,60,000 shares, 1,20,000 shares have been issued. And applications are received for 1,84,000 shares. Authority is 1,60,000. Company has issued 1,20,000. And applications that the company has received is of 1,84,000. So how much is in excess? It's very simple. 1,84,000 minus 1,20,000. That gives you 64,000 in excess. Yes? Out of 64,000, only 4,000 applications were rejected. And on balance, 1,20,000 shares were allotted. That means pro rata allotment. All called up amount were received in proper time. And a company maintains the combined share application and allotment account. 102 with with application, 103 with allotment. At the time of application, 2 is of application, 100 is of premium. On allotment, 3 is of allotment, 100 is of premium. Total issue price of the share, 205. 5 rupees is for share, 200 for premium. So let us see the journal entries. This is the explanation given that you will understand once we'll understand the journal entries. Yes, the very first journal entry. Bank account debit to share application and allotment account. So instead of writing it as to share application account, you just have to write down to share application and allotment account. Okay. How many applications have been received? 1,84,000. How much is the amount called up with application? 102. So simply 1,84,000 into 102. Simple. 1 crore 87 lakh 68,000 rupees. Now, the second step is what? Is to transfer application money to share capital. Yes? And the amount of premium to be credited separately. So here is the journal entry. Share application and allotment account debit to share capital account 1,20,000 into 5. 1,20,000 shares have been issued and hence only 1,20,000 shares have been considered here. Yes? Why 5 rupees? Because this is the combined journal entry. Here 2 rupees of application is transferred to share capital and 3 rupees of allotment becomes due. Yes? So instead of writing it 2 rupees, we have written 5 rupees. And if we are talking about securities premium, it is 200 here. 100 rupees that you have received here and another 100 rupees that becomes due on 1,20,000 shares. Second journal entry is a combination of 2 journal entries. Yes? We are transferring the amount of application and also allotment money becomes due together. That is the reason this amount and this amount. I mean the amount in journal entry number 1 and the amount in journal entry number 2 does not match. Because second journal entry is a combination of 2 journal entries. The transfer of application money and allotment money becomes due. Okay? Fine. So let us check the next journal entry. Obviously, it is about a refund. Share application and allotment account debit to bank account. Being amount refunded on rejected application of 4,000 shares at rupees 102 per share. Yes? This is the amount that we have rejected. 4,000 has been rejected. 102 rupees have been returned. This is the third journal entry. In the journal entries that we have understood here, first is for receipt of application money. Second, for transfer of application money and allotment money becomes due. The advance that we have kept is not to be shown in the second journal entry. That's the reason we have not credited it here separately. Okay? Because in the second journal entry, we are writing allotment money that becomes due. And there is no separate journal entry for crediting, for showing the advance money pro rata of the shares, of the amount received on shares. Third journal entry is about rejection of shares. 4,000 shares at rupees 102 per share that have been rejected. Yes, the amount that was received with the application has been returned. Lastly, on 1st of May, the journal entry is about receipt of allotment money. Bank account debit to share application and allotment account. Bank account debit to share application and allotment account. 62,40,000 rupees. How? Let us understand the calculation for that. Here, total amount received on share application 1,87,68,000. Less that you have rejected 4,08,000. So remaining 1,83,60,000. Amount of share application on this 1,20,000 into 102, 100 of premium, 2 rupees of application. So how much is excess? 61,20,000. How much is the amount due on allotment? 1,23,60,000. Of which how much is advance? 61,20,000. Yes, that we have understood. We have not rejected them. We have made a pro rata allotment. So 61,20,000 is deducted from 1,23,60,000. So remaining 62,40,000 is received. Alright. So 62,40,000 is received and is the amount of last journal entry. Here we have just calculated the amount of advance of allotment, but we have not shown it in journal entries. Yes, because there is no mention about the same in the journal entries that we have learned here when a combined account of share application and allotment is kept. You simply have to deduct that amount. You have to calculate it, but you don't have to show that separately. Alright? Okay. So this completes illustration 18, which was very simple and was easy. Of course, the total of debit and credit is to be similar. Now, sum number 22 that is given in your exercise is exactly similar to illustration 18. Alright? Still, let me explain this question so that you can solve it on your own. The authorized capital of Shubha Limited of Mumbai is 18 lakh shares of rupees 1 each. Authority that the company is having is of 18 lakh shares. What is the price of share? Face value only rupees 1. Company has issued 12 lakh shares at a premium of rupees 580 per share to public. So what is the issue price? 581. 1 rupees of share and 580 rupees of premium. Amount payable on this was as under. On application 290.50. Premium of rupees 290. That means only 50 paisa with application and remaining 50 paisa with allotment. So the amount on both the calls is similar. With application 290.5, with allotment 290.5. 0.5 in each is of share and 290 in each is of premium. Company has received applications of 16,50,000 from public. How many company has issued? 12 lakh. Received 16,50,000. That means 4,50,000 in excess. 4,50,000 were to be rejected, but company has rejected only 1,50,000 shares. That means the advance has been capped of 3 lakh shares as an advance of allotment. Yes. Amount called up were received in proper time. Company maintains the combined share application and allotment account. Past journal entries in the books of company for about transactions. Sum is extremely simple. Let us understand it on the basis of this journal entry. First journal entry is going to be the one which is presented on your screen. Let us talk about its amount. How many applications have been received? 16,50,000. So 16,50,000 here into 290.5. Yes, 16,50,000 into 290.5. Second journal entry. Share application and allotment debit to share capital to securities premium. Premium entire 580, share capital entire 1 rupee, and in application and allotment 581. Because in this journal entry the amount of share capital received and the amount of allotment that becomes due is presented combinedly. The number of shares to be considered is 12 lakh only. The way it is given in question. 12 lakh have been issued and hence you will consider only 12 lakh in second journal entry. Yes, and as I said, with respective amount. Again, the third journal entry is about rejection of shares. The company was supposed to reject the excess share applications, which is 4,50,000, but the company has rejected only 1,50,000 shares. Here it is. So 1,50,000 into 290.5, the amount that was received with application. Lastly, the last journal entry for receipt of allotment money. The amount that becomes due for allotment. How much? 12 lakh into 290.5. From that, you have to deduct the advance. Now, what is advance? 3 lakh shares. 3 lakh into 290.5. Simple. So that's all about this question. You may please solve this. This is completely similar to illustration 18 and I have explained the question very clearly. Now you are supposed to solve the same. Let us see the next question. Question number 23 in your textbook. I'm reading the same. It is given on page number. Let me just find it out. Page number 63 in your textbook. Your chapter is about to end. Yes. Panchvilla Manufacturing Limited issued 7,50,000 equity shares at rupees 10 each at a premium of 20% for public. How many shares the company has issued? 7,50,000. What is the face value? Rupees 10. What is the amount of premium? 20%. That is 2 rupees. 20% of 10 rupees is 2 rupees. So issue price of shares 12. Amount called up per share is as under. With application rupees 5. On allotment rupees 4. Including premium, that means 2 plus 2. On final call rupees 3. Applications received for 11,25,000 shares. So this is over subscription. Applications for 75,000 shares were rejected and amount paid on them was refunded. Pro rata allotment was made for 7,50,000 shares to the remaining applicants and excess application money was adjusted against the amount due on allotment. Obviously, in case of pro rata allotment of shares, always the advance is to be kept for allotment. And still, if the advance is more, it is to be kept as an advance for first and final call. A shareholder, Vishal, could not pay final call money on his 7,500 allotted shares. Vishal's shares were forfeited by company and reissued at 10% discount. Pass necessary journal entries in the books of the company for about transactions. Write journal entries in the books of company for the following. So you are provided with you are provided with an option here, but you are supposed to solve both of them. Yes, you'll be writing all the journal entries. And also you will write journal entries for share forfeiture, for reissue, and for closing share forfeiture account. For closing share forfeiture account is the amount when it is transferred to capital reserve account. Yes? Okay, so this sum is a combination of every topic. That what is the face value of the share, what is the amount of premium, the amount has been called up in installments, with premium, over subscription, pro rata, forfeiture, reissue, and closing forfeiture account. Yes, so you will surely try this sum. All the topics have been presented combinedly here. So in case if you want to solve this sum, firstly you need to study all the video lectures with extreme care, properly, completely. Yes, and with your 100% attention. Because every topic has been included in this sum. Yes? Fine then, let us see the last sum in your exercise, which is sum number 24. Is also about pro rata allotment. And the sum is very simple. Let us read the question, let us understand the same, and then this chapter is completed. If we are talking about the remaining sums in exercise that you will try on your own, there's nothing new. You just need to use your brain. Something will be twisted and will be presented that you should understand on your own by now. Yes, and of course, in case if you have any doubts, you can please let me know. Fine. Reading the last question of your exercise and the last question for this chapter. Ahmedabad Chemical Limited issued 1,50,000 equity shares of ₹100 each at a premium of 30 per share. So without giving it a second thought, the share is of ₹130. 30 rupees premium, 100 rupees is the price of share. How many shares have been issued? 1,50,000. On share application and allotment, ₹85 per share including premium. Yes? So here 30 rupees is of premium and remaining amount is of application and allotment. On share first and final call, balance amount, the remaining amount. Yes, out of 85, if 30 rupees is of premium, then obviously 55 rupees is of share price. Out of 100 rupees, 55 rupees is here for application and allotment. So remaining, what is the balance amount? ₹100 is the face value. 55 is with application and allotment. So obviously the remaining amount with first and final call. Yes, again a minor twist. Applications were received for 2,55,000 shares. Applications for 55,000 shares were rejected and allotment was made pro rata to the remaining applicants. Now there is nothing new. Yes? Excess share application and allotment money is to be credited to share first and final call. Amount was called on calls, so this is nothing new, nothing to explain in this. Just the twist was here that what is the balance amount called up with share first and final call. Yes, so that's clear I think. 100 rupees is of share, 30 rupees premium. 30 rupees with application and allotment is of premium. So 55 rupees obviously is of application and allotment combined. And remaining 45 rupees is for first and final call. So that is just a twist of amount and nothing else. Further, there is oversubscription and pro rata allotment. Applications, only 55,000 have been rejected. Yes? So you know well how to solve this. And that's all for today. Here we finish our chapter. And from next lecture, we are going to start with a new chapter that I'll inform you the next lecture. Sorry, that I will inform you in the next lecture itself. Before that, you should completely study this chapter properly, all the lectures. You should keep practicing the same. All the sums and exercise you will practice. The remaining that I have not given in homework in case by mistake, that also you will try to solve on your own. You'll be able to solve it for sure. Yes. So we end this chapter, and lastly, on page number 49, 50, 51, 52, several journal entries have been presented which are specifically for theory. So you will read them well, and also you will read the entire chapter once to understand theory concepts properly. You will not skip a single topic. You just have to go through. Yes, and that's all. We'll see you all soon in the next lecture. Till then, stay home, stay safe, and study well.